webinar that we have, where we will be looking at the markets and giving an overall view, both from a technical and a fundamental perspective. I'm just going to be going through some of the recent sort of events and that have occurred, and we'll be looking at some of the major reports that are coming out this week. So let's move straight into that. Here, I'm just going to bring up Forex Factory here quickly. Going to have a look at some of the market movements. Okay, as we can see here, the pound has really been setting off quite. If we look at all the other currencies, the pound is the weakest. Aussie dollar seems to be making some form of comeback. There was quite a bit of selling going on yesterday, but it has rebounded. Let's have a look what's been going on as far as fundamental reports are concerned. Right now, yesterday we had building approvals coming out month on month. That came in lower than expected. Manufacturing PMI came in lower than expected. So that, as far as if we're looking at in terms of the actual numbers for PMI, it came in at 56.7 and was forecast at 57.1. So yeah, we're looking at a lower than expected number. Excuse me, I've got a little bit of a cold. So that's where we're seeing the current sort of sell-off in the pound. The number coming in quite substantially lower, and they're expecting, the recovery in the UK, as the recent reports that have come out have been quite good. So this is a bit of a setback over there. Moving on, the ISM manufacturing PMI came in lower than expected as well, and as expected, the cash rate, the interest rate in Australia remained the same. So we're just now waiting for the RBI monetary policy statement, which is going to be held on the 7th of February. Right, so moving on now, we're looking at this construction PMI coming out of the UK today in about just under 2 hours time, and that could substantially move the market. If we get a worse than expected number over here, we could see further selling in the pound as well. And then on Wednesday, we've got services PMI as well, ADP non-farm employment change, ISM manufacturing PMI. On Thursday, this is the big day. We're going to have the interest rate announcements out of the UK. That's expected to remain at 0.5%. And then we've got the interest rate coming out of the Eurozone that is expected to remain at 0.25%. The most important part of this is the ECB press conference, which takes place 45 minutes later. Now, that is where they will give any maybe change in policy or forward looking to see if there's if there's going to be a possibility of any intervention as far as interest rates are concerned, and they'll be discussing that at that ECB press conference. Right, so that is definitely a market moving event. So if you are trading, be very careful. It'll be around 3:30 p.m. on Thursday, February the 6th, and that is Central African time, so it's GMT plus 2. So if you GMT, that will be at 1:30. Then on Friday, we have the largest report as far as job creation is concerned in the US, and that is non-farm payroll. That is expected to come in. We're expecting a recovery around the 180,000 forecast. Last month came in really low. There was we had some really bad weather in the US, and that affected the actual numbers that we saw as far as employment was concerned. So that's just to look at what is coming out from a perspective of economic reports. We'll just be going through a few more headlines over here. I just want to bring up something here. Okay, I just want to move this across. I did a little bit of a presentation here. Right, we've just gone through that. Now, the fundamentals, what we're seeing across the board is US dollar strength that's coming in. This is due to a whole host of things that are occurring in the markets, but what's driving it is obviously the FOMC is embarking on tapering as far as the quantitative easing is concerned. They haven't decided to take out quantitative easing totally, but they have reduced the amount that they are pushing into the market. So they've reduced it by 10 billion US dollars. The current amount is 65 billion. That they providing liquidity into the market. And obviously what this will do is, if there's less supply of US dollars into the market, the US dollar will strengthen, or should strengthen on the back of that. And we have seen that whenever there's talk of quantitative easing or the tapering effect, you see that the US dollar does strengthen. If you look at the US dollar index, you'll see that the US dollar has strengthened against all currencies right across the board. What we've also seen is that the Chinese manufacturing data, the output has showed some weakness, and this is creating some volatility in the market. There's a few jitters in the market where the worldwide economy is looking at China and saying, well, there could be a slowdown in China, and that could and will affect the rest of the world. They're the second largest economy in the world, and it's starting to affect emerging markets as well as global markets. We're seeing a sell-off. There's also some talk of major hedge funds that are selling off and repositioning themselves, and that has been happening since the beginning of the year. We're seeing, and we'll go through some of the charts, but you'll see that there is quite a lot of risk aversion that's starting to creep into the markets, and that is translated into selling off of indices throughout the world. All the major indices are selling off on the back of this risk aversion. Looking forward to Thursday, ECB could adopt a negative deposit rate and cut the refi rate by 5 to 10 basis points. Look, this won't happen now, but there could be some form of or talk that could support that. So we've just got to look at how Mario Draghi is positioning himself and what he may have to say. But then as far as risk aversion in the markets are concerned, we're seeing quite a lot of risk aversion coming through into the markets, and as far as emerging markets are concerned, and globally. But the developing nations, what's happened is, due to the super easy supply of money into the market through quantitative easing, that has actually assisted emerging markets. And now we're seeing a reverse of that, where cash is now being withdrawn out of the markets, and we're seeing those markets actually feel the crunch. So it's a typical rush of hot money out of riskier assets, and one unwinding of those short positions back into safe haven assets. And that's the classic risk aversion. What we've also seen is over the last year, or possibly even longer, there hasn't been much of a pullback as far as the global markets are concerned, and the markets globally are due for some form of correction. That is just normal market trends. We haven't seen major trend lines on a daily basis being broken yet, and we're starting to see that develop. So from a technical standpoint and a fundamental standpoint, we could see further sell-off in these markets. And there's also been quite a lot of unrest in some of these emerging markets. We see there's quite a lot of riots and that going on in Ukraine, and there's a lot of stuff going on. Recently we had Turkey raising their interest rates by 225 basis points. Here in South Africa, we had a 50 basis point increase in our interest rate, and but that really hasn't affected or strengthened the rand at all. In fact, we've seen further weakness, because there's some other underlying effects that are causing the weakness in the economy. Right, so the main movers as such, the BOE interest rate decision on Thursday, most economists are expecting that it will be kept at 0.5%, and that their repurchase or their bond purchase program will remain at £375 billion. However, there is a view that the UK economy, or Governor Carney, should be looking forward thinking and looking at possibly raising interest rates due to the fast pace at which the UK economy is actually recovering. It's last year it grew at the fastest annual pace since 2007. So it all depends on how the data. If we have a lot of positive data coming out, we are seeing the pound selling off due to negative data. But if there is the underlying data continues in the upward trend, we could see quite a big reversal in that. The big report, as far as the euro is concerned, on Thursday at 3:30 p.m. Central African time, interest rate announcement, and then following that will be the press conference. Interest rates are set to be on hold at 0.25%. However, the overall tone for the press conference is said to be, or should be, of a dovish nature, which means that there could be some form of sell-off in the euro-US dollar. It all depends on how Mario Draghi handles the press conference, and how he wants to convey the message across. So they're all very political in the way that they don't like to create any shock in the market. So they'll say the right things at the right time. But there is, in this instance, a possibility of going forward an interest rate cut, as I mentioned. So looking forward in the US, you've got the US dollar with the possibility of an interest rate hike over the next, say, 6 to 12 months. And then conversely, we've got possibility of interest rate cut in the Eurozone. So both they're moving away from each other basically. So you've got the Eurozone, which could be moving to the downside, and you've got the US dollar moving to the upside. And the more that this plays out, the more we're going to see the Euro US dollar sell off. Right, as I mentioned earlier, the main report, non-farm payroll, coming out on Friday, that would a lot of what happened last month is due to the bad report that came out is due to the cold weather that they had in December. Normally what happens is in the month after any sort of weather related incidents, there's a reversal. So they're looking at excuse me, a reversal of up to the median is over 180,000 jobs being created, and the estimates range from anywhere between 105 to 270,000. Okay, and the RBI in Australia, they have held the interest rates at 2.5%. There is a meeting or a statement that's going to be made on Friday, on February the 7th, and that will give some form of forecast as to what they're going to be doing going forward. What is happening in Australia is they are favouring, or it's the economists are looking at it as favouring a weaker Australian dollar, and a possible further interest rate. They had an interest rate cut in August, and there could be a further interest rate cut going forward in accordance with the to support their policy economy, and it will all have to be dependent on what happens with the data that's coming out. So some of the figures that are coming out is they're looking to a better valuation of the currency would be around the 0.8 to 0.85 level, would be more desirable. Right, this is what we had yesterday. I'm going to be bringing up the live charts. So yesterday I said that there was a webinar we had yesterday, a break of 1.35. We could be seeing further movement down depending on what happens with the ECB on Thursday. Any movement back up again, I would look as an opportunity to sell short. So I'm quite bearish on the Euro US dollar. Anyway, let's bring up the charts. We'll first look at the Euro US dollar. Alright, so I'm going to bring up an hourly chart here. So what we are seeing here is there's a bit of a bounce back here. Let's just put our fibs on there and see if we take that as a high, that as a low. Right, if we take that as the sort of major movement down, the pullback is just under the 38.2 retracement level. So my feeling is that we could see some consolidation going into the ECB press conference on Thursday. That will definitely give more market direction. My bias is to look for selling opportunities, so selling into strength with the view of a break of these lows over here. So let's just say we're getting in at these levels at 35.26. I'm looking for a break. So yeah, we said that's about 50 pips break here with further movement down here. Let's just have a look at some further levels here. Right, and as you can see there, let's just bring up the charts here. I'll just bring up my other chart of the Right, so the levels that we're looking at, obviously 135 is the one of the main levels, 134, 133, and then 131. And then to the upside here, around the 137 level, we're finding some resistance, and then the 138 level, there's quite a lot of resistance over there. Yeah, so there we go. 138.15, the high over here. If we draw, so we'll put a line in here. Right, you can see there that 138.32 at this level over here is just above 138. We're finding a lot of, so between 138 and 138.30 there's definite resistance, and then just under 139 is where it spiked up to the other day. As we mentioned, we're now sitting around the 135 level, currently 135.20. Right, so that's my prediction. I'm bearish on the euro US dollar, and especially if Draghi says anything on Thursday to intimate any form of interest rate cut, or bearish view, dovish view on the euro, we could see quite a substantial sell-off. So watch that quite closely. The pound, let's go to the pound quickly. Just going to bring up another view here. Right, so looking at the pound, I'm just going to bring up a 1 hour. Yeah, very bearish at the moment. I'm still of the opinion that if, as I said, if there's any hint of a interest rate hike and any further good data coming out of the UK, we could see quite a reversal over here. So be very careful about how you play the pound. But the problem is that if you're looking at a longer term view where the pound could potentially be getting stronger, the US dollar could be getting stronger as well. When you have both currencies moving in the same direction, it negates the actual move. So yeah, a bit of a hard one to trade, because you know what's going to move, what's going to be stronger. Is the pound going to be stronger than the US dollar long term? I don't think so. I think it's the US dollar that's going to be the stronger of most currencies going throughout this year. That's my personal view. So what we're looking at here, we broke some substantial support here yesterday around the 164 level, and we've seen a sell-off of about 160 pips. Let's just look at a 4-hour chart. Alright, so we're starting to hit this level over here, support levels over here. If we get further bad data, we could see it moving possibly down to even these levels here. Okay, which is about 120 odd pips. And this is just what we saw yesterday, is that there was some one of the reports that came out came in substantially lower than expected, and this is causing this sell-off over here. But my feeling is that we're going to find some, especially before the interest rate announcement on Thursday. They typically don't have the same type of press conference as the ECB in the UK. But I think we could see some form of consolidation over here. So I'm not really looking to trade the pound right now. I'm neutral to bearish. Right, the next currency that we're going to look at is the Aussie dollar. Right, now the Aussie dollar I'm bearish on as well. Although, looking at this chart, you wouldn't think that the Aussie's in any major trouble, but I'd rather be selling the Aussie than buying it at this point in time. So again, any strength coming through, look to sell it. That's my bias on the Aussie dollar. From a pure technical standpoint, currently the Aussie, and this is just this morning, really seems to be recovering quite nicely. But I'm looking at breaks of these lows over here. If I look at a daily chart, you can see very bearish. Okay, except for this bit of a spike up over here, but I would think that you're more than likely going to break these levels here at 0.86477. Generally speaking, you can see Aussie on a daily chart, big sell-off over here, pull back here, and now we're still looking very bearish at this point in time if we're looking at a daily chart. US dollar yen, let's bring that up. Sorry guys, I'm just trying to pick up here. I'll just open a new chart here. Right, US dollar yen. Currently we're seeing quite a lot of strength coming through in the Japanese yen. Alright, and that's causing this downward sort of move on the US dollar yen. Now the thing is, when you see the correlation effect, when stock markets sell off, you normally see a strengthening of the Japanese yen as the positions unwind, because the Japanese yen is used as a funding currency, right? So when you have risk aversion, stock markets sell off, and cash flows back into the Japanese yen. Japanese yen strengthens. When you see there's risk appetite and stock markets are rising, the Japanese yen weakens as it's being used. They're borrowing against the Japanese yen and using it as a funding currency to get into high yielding asset classes, better returns with a low interest rate environment, as we see with Japanese yen. So essentially what we're seeing now is, because there's this global sort of turmoil with the emerging markets, slowdown in Russia, in China, we now seeing a bit of a sell-off in the in global markets, and as a result the Japanese yen is strengthening, and that is why we're seeing this US dollar yen move to the downside. However, going forward, I'm talking long term now, a longer term view. I would expect that the US dollar yen is going to strengthen. I'm going to bring up a daily chart here. strengthen back up to these levels over here and beyond. The Japanese yen is really the only currency that is strengthening against the US dollar at this point in time. All the other currencies, or most of them, are weakening against the US dollar. And if we look at this, if we look at my dashboard over here, all right, this won't give you a sense of. If we're looking at a 4-hour, we can see that Japanese yen is definitely showing a lot of strength. So the real trade right now is, or the biggest disparity between the two currencies is the weakness in the pound and the strength in the Japanese yen. So those are the two that are moving apart from each other quite substantially. And we are seeing, as I said, a pullback in the Aussie dollar there. Okay, what other currencies do we want to have a look at? If you trade the US dollar ZAR, I'm looking at further weakness going forward. Right. Yesterday we saw, even with an interest rate hike, I still believe that we're going to head higher and break these levels here. This high here set at around the 1138 level. We saw some weakness coming through yesterday, a bit of strength here today, so it's sort of oscillating around between these levels over here. Just draw some lines in here. And around here, this area over here at the 1112 sort of area. You can see how the market's oscillating there, so it needs to move up through this line of resistance over here and then break these levels at 1133 and 1138. So my view is position yourself longer term view for a break back up again. Right, I would take a longer term view and put my stop below these levels over here, or possibly even here at 1078. Yeah, quite big stops, but if you're playing the longer term view, you need to have those larger stops. What else have we got here? I'd like to just show you the S&P, because that's giving us a nice view on the actual risk aversion in the markets. There we go. Okay, this is a daily, and we can see that the S&P big sell-off yesterday, bit of consolidation and a further continuation to the downside. Just give you a different view here. But it definitely looks like the risk-averse trade is starting to play out. Well, it has been playing out over the last sort of 2-3 weeks. And I'm thinking that this is going to just continue. I'm looking for another one here. This one here. Right. Now that gives you quite a nice view of what is actually, and this is on a daily chart. You can see over here, the market, generally speaking, has been, if we draw some trend lines in, from say around here, we've actually broken that trend line. It's a very significant trend line. This trend is actually, started. Let's take it back even further. So if we take it from this low over here, okay, so that's your really major trend line there. Then we can take another trend line from here, and you can see that one's been broken right there. Let's zoom in a bit, and this is now we're going back to October 2011, right? If we're looking at this area over here, where the graph gets even steeper, we're looking at November 2012. Markets continued almost unabated with minor pullbacks. Yeah, and there we can see it. If we're looking at those lows over there, it's just broken through yesterday, through that trend line. You see, there we go. And we're starting to see, you can see the volatility increasing to the downside. So, round about here, on the 23rd of January, we saw the first sort of the start of the downward spiral. Big sell-off the following day, some consolidation, and then a nice big sell-off yesterday as well. So I mean, if we look at how much it sold off, and I've been actually forewarning this for quite a long time now. It's about 103 points. And even on yesterday's trade, I was looking at a break over here. You would have made yourself about between 20 and 30 points, I think, on the back of the trade that I gave yesterday. So, yeah, those are my recommendations. Bearish on the euro, US dollar, and the yen crosses. So euro yen, pound US dollar. The pound US dollar I'd be a little bit wary about, because we could see a reversal there, and it could be any report that comes in above could push the pound back up again. Then we've got the Aussie, which I'm very bearish on as well, and we've got the indices, any indices, whether it be the JSE, the Nasdaq, the Dow, the S&P, FTSE, all of them. I'm looking at a global sort of sell-off on indices. And then if we look at the US dollar against the rand, I'm looking at further weakness going forward. Anyway, guys, that's going to be the wrap up for today. If there are any questions that you would like to ask, you're welcome to do so. Just push this. Yeah. All right, I'm going to end the session with that, and we'll see you on Thursday then, and then we can have a further wrap up of what has happened on the week. Thursday is going to be a really important day, and we'll see how we can position ourselves for Thursday's trading, as well as how to trade non-farm payroll coming out on Friday. So very important session on Thursday. We'll see you there. Cheers for now.